Everybody, welcome back to the NWR Virtual Investor Day. Apologies, we're running just a couple of minutes behind. For those of you who might just be joining us for the first time, I'm sure most of you have been on. We're getting towards the end of 3 very full days. So hopefully you've enjoyed all of these presentations. We're going to go now to Pat Howard, the CEO of MSL Solutions. MSL is a leading SaaS technology provider in the sports, leisure, and hospitality sectors. So helping some of the world's most iconic venues around the world, like stadiums, arenas, pubs, clubs, sporting associations, golf courses, you name it, they're there. They're looking to deliver outstanding customer experiences during every visit. MSL Solutions now has more than 5,000 customers around the world. I'm going to hand over to Pat Howard to take us through a short presentation. Of course, if you'd like to ask questions from Pat, just drop them into that Q&A box at the bottom of your screen, and we will have a moderated session after the presentation. Pat, over to you.
Thanks very much, and thanks for the intro. I appreciate we've all had a long couple of days on those calls, so I'll go into the background behind MSL. As was discussed, 5,000 customers in 30 plus countries. We have 118 employees. To try and demystify the company a little bit, we have effectively 4 brands that you may be aware of. So if there are any golfers on the call, you'll be aware of the company GolfLink. GolfLink is handicapping, and if you have a handicap in Australia, you are a GolfLink customer today, and you'll pay us $3.50 per year every year under that agreement. SwiftPOS is a point of sale that is in venues around the world, pubs and clubs in Australia. We have a significant amount of stadiums such as Wembley, Manchester United, Manchester City, the Gabba, MCG, etc. We also have stadiums in point of sale in the MSL Potato business based out of the UK. And Golfbox is a 100% SaaS business based out of mainland Europe in Denmark. And they provide world handicapping, tournament management, and golf management systems. So we are in venues around the world and in pubs and clubs predominantly in Australia. A major change over the last and focus over the last 3 or 4 months was the acquisition of SwiftPOS, which I'll go into during this presentation. That came with an EBITDA positive and customer positive acquisition, which has been incredibly positive over the last 4 months, bedding down that acquisition. As I stated, we have some iconic brands that you may be aware of or may not be aware of. Our largest customer is Golf Australia. That contract goes out till 2025, and it's already in discussion. We have customers with the RNA, Norwegian, Iceland, Switzerland, Sweden golf federations, plus many golf courses underneath that. We're in some of the biggest stadiums and arenas, but then we're also in large hospitality and leisure, such as Maryvale, the Pizza Hut in the UK, some of the Village Roadshow sites on the Gold Coast, such as Wet n Wild. So we have a very diverse mix of venues and obviously those golf associations. Incredibly positive second half that we're very proud of. There's been a strong focus on EBITDA through 2020. EBITDA positive in the first half of FY21, that's from July through to December. Operational cash flow positive through that period, and we've now done 3 of the last 4 OPEX cash flow positive, and that will continue into this next quarter. OPEX improved by right-sizing the headcount costs down by 19%. Our recurring revenue is our biggest metric, and you will see a slide on that where we consistently look for recurring revenue to be above OPEX because we've had a focus on sustainability. And then the SwiftPOS acquisition, which occurred in mid-November, is contributing positively to the cash flow, and that allows us to reinvest in technology development. It'll be cash flow positive and obviously grow our customer base. Particularly the SwiftPOS acquisition, we're seeing of those 4,000 customers, 80% are in Australia or New Zealand. But we have another 24 countries where we've barely scratched the surface, and the opportunity to grow SwiftPOS through our overseas reseller network and market is considerable. We have only 43 sites in the US, and barely the opportunity to grow in that market is significant. As I stated, recurring sales over OPEX, there's been very much a focus. When new management came in August 19, and we said to the market on a placement and SPP back in November 2019 that this was going to be the core metric to make sure we had sustainability. So we have achieved that every month since April 2020, and we've been continually focused on a sustainable business. We have very different invoicing, so I know a lot of people ask around what is your standard contract. We have some long-term contracts that either pay monthly, annually, quarterly, depending on the products. And those products are usually either in the point of sale or point of sale affiliated, or golf and golf affiliated. Particularly Golfbox, the fourth dot point down in Denmark, is a truly SaaS, strong SaaS operation, long-term contracts with federated entities such as I described, Denmark, Norway, Sweden, Iceland, Switzerland, etc. So, and golf has been incredibly buoyant through this period. I know we occasionally will have Victorians on the market going, golf was closed. It was one of the few places in the world golf was closed, and we've seen really strong growth out of both the Australian golf scene but also particularly Denmark, and I'll go into those jurisdictions a little bit later. On the last dot point on this slide, just to explain, on our new sales, there's always a mix of recurring revenue, professional services or implementations, and also hardware. Usually for every new sale, we have around 20% becomes recurring revenue over the period. The SwiftPOS acquisition that I alluded to earlier, it has increased our venues from 1,000 to 4,000 venues, to 5,000 venues when you add those together, in 26 countries, but there is a significant Australia-New Zealand bias. The opportunity to grow outside of Australia and New Zealand is significant. Furthermore, we've got other IP that works very closely with SwiftPOS. Prior to the acquisition, we were the biggest reseller of that technology. We know it well. And as a consequence, it has been a really strong integration and very, very positive for the business. On the fourth dot point, we now own and govern the technology roadmap on point of sale, which is allowing us to drive outcomes for those enterprise type deals. When you are a reseller, you don't get to control that as much. And that's been significantly beneficial in being able to go to tender and be able to work with those long-term customers. You know, we're based in Brisbane. There are stadium opportunities. This, highly likely to be the site of the next Olympics, and the ability to work on the ground with different organisations to drive really great interactions with customers, be it stadiums, be it enterprise, be it government, is going to be incredibly important over the next little bit. Referring back to the acquisition itself in terms of metrics in the first 6 weeks, and this is all public, it contributed EBITDA of 240K from mid-November to 31st of December, showing a EBITDA run rate of 1.8 million to the bottom line. I won't dwell on this, but if you want to, and while I'm speaking to give you an understanding of what point of sale can be, you can go and scan on your right-hand side the camera. You'll be able to order on this, and our ability to extend point of sale from beyond just the point of sale out into sitting at your seat, sitting in a stadium, in-seat ordering, delivering in-seat, and many of these trials have been had. If you go and Google in-seat ordering at the Gabba, you can see that we've been doing this well before COVID. And just the ability to have different ways of ordering can decrease the amount of lines, decrease the amount of interaction between people, and make the interaction and the experience even stronger. Whilst for those of us in Australia, we understand that we are coming out of this far more than a lot of other countries. When you take this technology to the UK and you lead their exit from COVID, we see a lot of opportunities to use QR codes, extending the point of sale to drive in-seat ordering, to drive pre-ordering, so you never miss a minute of play. So we're really excited about what can happen by extending our point of sale. We don't necessarily think that the concept of hardware in stadiums and some of those others are necessarily the best way to do this. We are seeing other people do that, and we're happy to integrate within those. And I refer to me and you, and we're making sure we're very agnostic in this process. But at the same stage, we see a lot of opportunity coming out of COVID to implement this in stadium and large venues alike. We do not go into the small cafe space as much. We see a lot of turnover in that range, and we see competitors that are willing to provide point of sale for free and try and get the transactional income. We are in the larger space, multi-venue, try and look for those enterprise type deals. Reflecting on that, we have not only the point of sale, but visitor entry, in-seat, at table, click and order, order and pay. And the growth in order and pay and click and collect is significant in our venues and giving them a lot of flexibility, not only to be an in-dining experience, but also extend that, particularly with the amount of third-party apps that we know that are out there at the moment, and they are eroding margin for many of the venues that we know. The ability to help those venues maintain their margin by their point of sale being extending from behind the bar is going to be an incredibly important part long term. In saying that, we're not trying to be dictatorial in that space. We work with buy now, pay later groups. We work with third-party integrators such as me and you, other providers, to make sure that our point of sale is really agnostic in a venue mentality. In saying that, we've also got long-term partnerships with venues such as ASM. ASM are a global leader in venues such as the stadium market, and we've done deals with them in terms of Perth Arena recently, the ICC in Sydney, the International Convention Centre, the Brisbane Entertainment Centre, and they run Venues Live as well, which has got 9 stadiums in Australia and significant amounts of 300 stadiums worldwide. To shift gear now into golf, and I'll go to the last point first, where MSL is the only company that does world handicapping, golf management and tournament management as a package. There are others that are significant in tournament management or golf management singularly, but we've been very strong in that space. So over the last 12 months, we've successfully launched world handicapping in 8 different countries. That is 1.6 million people on our database have come across. Australia is the largest of those at sort of effectively 400,000 golfers have come across. We've also launched a SOGO sports partnership, an integrated mobile sporting app. You can see the picture of that it's on my right-hand side, hopefully it's on your right-hand side. And then obviously the Golf Australia partnership, which is long-term. So we see we have a very strong golf solution, not only for Australia, but with a strong presence in Europe. And we have seen some strong growth in that European market. P&L, the financials, as you will see, we've had EBITDA inclusive government relief during the period was 1.683, which is a $2.8 million turnaround from the previous period, corresponding period. Taking the government COVID relief away, it was still a $0.72 million EBITDA for the half, which is an improvement of 1.88 million for that half as well. On top of that, and it hasn't all been driven just by cost reduction, Australia and Denmark have both been strong in their revenue, both rebounded well, with Golf Bucks revenue up 10.6%. Golf Box, as a reminder, is the Denmark business where you'd suspect a lot of businesses were closed. Golf continued to strive. UK results obviously remain subdued, and I don't expect them to hit in the second half of FY21, but we are positive around the first half of FY22. We're seeing some positivity in the UK. Tenders are opening up, and the ability not only in the pub and club space, but also the stadium space is starting to see tenders come out fairly rapidly and with partnerships. In terms of the cash flow, I'll dwell on the bottom picture, which is the first half of each of FY19, FY20 and FY21. As I've said, that operational cash flow positivity will continue over this third quarter, and we're going to see, with the improvement in performance in EBITDA, and hopefully with the growth in the UK in the second half of, second half of the year in 2021, we're going to see some real growth in that space, and we're really positive around that. Our cash balance of 2.8 million on the 31st of December continues to grow, and as I said, the EBITDA contribution from SwiftPOS is considerable. Trying to break this down into a segment position by APAC, UK and Denmark. Australia and Denmark have both rebounded well with a 10.6% increase. UK results remain subdued, but the new opportunities are emerging with increased confidence in the UK, and I think we're seeing kids go back to school, and after you've been in lockdown for 12 months, it's incredible. It's amazing what you take as positive. And each segment now stands alone as EBITDA positive. That wasn't an easy thing to do. Obviously, in the UK, we had to make significant cuts, but you'll also see in the corporate overheads, we decreased from a 2.8 million in FY19 to 1.8 the following year. So significant at corporate level, and then each one of the segments as well to show that significant EBITDA turnaround. We'll also reflect on Denmark's business growth, 1.6 to 1.8 in revenue from external customers. So going down the dot points from the investment highlights, there is diverse revenue streams, both cloud and on-premise. And whilst cloud is going to be the future, we see, particularly in the pub and club sector, an on-premise solution is still preferred by many. And so we have, with version 9 of SwiftPOS, you have on-premise ability, and then we look at many of our in the future cloud solutions, and the ability, because we have cloud, because we have cash flow positive, the ability to invest to open up into those enterprise type deals, we're really, really positive about, and both in Australia and New Zealand and overseas. 73% of our business is recurring. You'll see the overall sales at times during 2020. There was some rationalisation of products, some non-profitable products. There were significant hardware sales in FY19 that we have tried to move away from unless it was supporting clients. So we genuinely believe that we have increased the quality of our revenue over the period, and that is showing in the bottom line results over the past 18 months or so. Improving cash and earnings performance, operational cash flow and EBITDA positive. I've said that many times. Large addressable markets, stadiums, arenas, golf facilities, clubs and pubs, member-based organisations. We see them all as venues, and we see all the products that surround that, giving that one solution. In Australia, we believe we've only got 5% penetration, and the ability to improve the technology, own the technology roadmap that we do now. We're seeing far greater traction in those first couple of months post the SwiftPOS acquisition. We're getting growth in value of our customers in terms of the deal size due to that acquisition. The partnerships, we're getting likes of me and you and others, third-party providers want to have those conversations with us, and end users and adjacent service providers. We're seeing those premium in-seat offerings like me and you, but others come to us as well, and we're trying to be as agnostic as possible. And we're having the full impact of FY20's changes before COVID hit to actually have an impact on the bottom line. I'll reiterate here a couple of things to take away from our presentation. With recurring revenue in the ballpark of 20 million at any given time, and I'll let you do your own valuation on where you think our share price sits in regards to recurring revenue and share price. But we do see the overseas reseller growth being a significant shift change in being able to get growth. We see the partnering opportunities both in golf and the acquisition of SwiftPOS mean that it's been incredibly positive. We saw $80 million of revenue go through our tills in February. That transactional value, we believe, has some real upside in the future. And we don't, at the moment, do anything in terms of transactional value. It's very much a SaaS model. And so on top of sales, recurring revenue and transactional value, we do see the opportunity for growth both overseas and Australia to be really considerable. I'll leave directors and key management and pass back to the moderator.
Excellent. Thank you very much, Pat. Very interesting. We've got some questions coming in, and we're going to try and whip through as many as we can because we are running a little bit over time. Some of the, no, you don't get off the hook completely. Some of the larger enterprise type contracts you've been contesting, what kind of scale are we looking at compared to, you know, what you've gone after traditionally?
Yeah, so if you take International Convention Centre in Sydney or Perth Arena, they're both ASM sites. They have around about 500 terminals. Now, traditionally, we've been in the 50, 60 terminal space. So the ability to go and have a look at larger deals, both stadium-wise or then multi-stadium sites as well. So that takes you into thousands of terminals. If you take venues live, they have nearly 1,600 terminals in the 7 stadiums they have in Sydney. And by able to leverage the ability to move terminals in a SaaS model, you can give them far greater flexibility to move their terminals to operate in different stadiums, particularly capacities go up and down. So in terms of dollar values, they're obviously negotiable. Perth, as an example, was $500,000 up front, but 100,000 of that was recurring. As I alluded to, 20% of most new sales becomes recurring revenue.
Okay, Michael wants you to shed a little bit more light on the cost base. He says, given the significant amount of change in the company over the past 2 years, it's difficult to get a handle on the cost base of the business. Could you comment on the extent to which you kind of believe that at the moment it's right-sized, and whether more investment needs to be made in cost overheads in order to support the growth plans that you have?
Yeah, so I think it's a really fair question. I think we've got a cost base now around about, when you include SwiftPOS, of around about $18 million a year. We think that is pretty reasonable and a fairly good indicator for investors. We see that SwiftPOS is a very strong tech house, so that it's a full reseller business. So everybody that came across with the business is technical. Golf is also technical, Golf Box. So we have the best part of 35, 36 developers in that space already in their team. Product rationalisation may mean that we still close down some products to reinvest in other R&D development, but that $18 million OPEX cost base, I think, is a very good indicator for investors to rely on.
Okay. You've touched on SwiftPOS a couple of times during the presentation, but could you give us a little bit more sort of colour on the types of opportunities that you're being invited to pitch for post that acquisition?
Yeah, so it comes in a couple of ways. So integrators need sites, and be it a buy now, pay later organisation, be it the payment providers such as the 4 banks, the Tyros, etc. They need to be able to integrate in with the point of sale. And when you have scale, such as we do, you get a clip on most of those tickets. So we get 15% of the revenue when Tyro Connect is used in those platforms, and those other providers are now coming to us looking to renegotiate their terms now that we have scale of the number of venues that we have.
Okay, speaking of venues, the relationship that you've had with ASM, very fruitful to date. Do you see any additional ASM equivalent venue groups in your pipeline that could help to accelerate your growth?
Yeah, we do. And look, ASM also are owners in Venues Live. They're a 25% owner in Venues Live. So in the stadium space, I think it's particularly exciting. If you then go to Stadiums Queensland as an example, I think we can all assume that growth in stadiums with the Olympic runway coming up will be pretty exciting. So I think the opportunity to work with those larger enterprise and give them great customer solutions will be really important. If you then go to the UK, we are already in 14 of the 20 English Premier League clubs. So we have strong relationships either directly, say with Man City, or with some of the providers that link you in through this. So that might be the Compasses, Sodexos, Elixirs, and we do work with all of those organisations.
Okay, one last question, and then I think we're going to have to wrap this one up. We're running out of time. What other areas would you look to bulk up via an acquisition? Is it more attractive to acquire a revenue line, or is it more about building out the tech stack?
I think there's a little bit of both. I think if you can go into the EBITDA accretive model, where we have a look at other point of sale in different sectors, I'll be always interested in that. And at the same stage, integrating the tech to deal with payment gateways and own the whole journey as we have started to do, as you saw with that QR code earlier in the presentation. So we have the ability to work on a tech stack that can give you the whole destination, which is, as you buy a ticket, go to the destination, go to a venue that also uses a SwiftPOS or some of the other products, being able to own that whole destination and be able to clip the ticket along that and get transactional revenue is a real opportunity in this space.
Okay. Pat, we're going to have to leave it there. Great to chat. Thank you very much for that presentation. Any more questions for Pat, you can just drop the guys at NWR a line and I'm sure they will sort you out. Otherwise, for those of you joining us at the next presentation, we'll see you in a minute.
Thank you very much.